Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, July 26th, the year 2018. Let's talk trading. Winning versus losing. I was reading an email, and it says, I guess there's a Eastern philosophy. When you win, you lose, and when you lose, you win. Basically, it says that when you win, you wind up losing something. Their example was, if you dedicated your whole life to winning a gold medal and you win, well, now you lost that pursuit. You accomplished your goal, so you no longer have that goal. Of course, you might want to go again in 4 years and do it all over. But the point is that you lose something when you win, and you might win something when you lose. So as traders, when we lose, maybe we win by gaining the knowledge of, when we analyze the trade and we look at, maybe there's a reason we lost, like we didn't employ our stop loss. Maybe we jumped the gun, or we chased the trade when we shouldn't have. Then we gain the knowledge, and hopefully next time we trade, we apply that knowledge and we become on the profitable side. Let's just take a look at a few things here. And the first thing we always look at is the money and risk management screen, just to burn it into your brains. Is it burned in there yet? Nobody's ever really said anything about money and risk management in the reply, so I'm wondering, is it working? And we can see the yen's right back around the 111.00 spot. I think it was right there yesterday. So there was some up and down motion. Once again, it keeps popping out of that upper wick zone of the previous month's candle. On the weekly, we can see we're still below the lower wick zone of the previous wick's candle. And we only have 2 pairs right now that haven't filled on the gap. So I guess there's still opportunity there. Let's take a quick look and see what we can see. On the euro yen, I don't think that gap's going to get filled. I really don't. But anything can happen. We could have 27 pip turnaround. Anything's possible, right? What about the New Zealand yen? And you can see here we'd probably have to have about a 50 pip or more turnaround, maybe 60, to take out that gap. You can see the gap right there. There's the weekly high. There's last week's close. The gap is real easy to see there. On the daily, you can see we left that lower wick zone and went to the upside. I think I pointed out that trade yesterday at 110.93 number. You can see the daily opens 110.96. And there was a chance to make some pips between the 93 and the 11.18 high that we put in today. Or actually the chart says 11.17, 11.18, 11.17.8, close enough, right? And on taking a look at the range, only 1 over 100 pips. Once again, anemic down here at the yen, and there's the euro yen. I'm really thinking about switching. Thing is, I just been trading the dollar yen so long, the predictability for me, or not predictability, but just being able to exploit certain behaviors of the way the pair moves. You can see right here there was a short for profit. Now if you put the short on there and you put your stop loss there, that was a loser. but we've got a winner here. Here's another place where there was a win, and you see right here, you've got, if you're in that trade right here, Randy real-time trade, you see you can start to make profit as opposed to Harry hindsight, the Randy real-time trade. And right now we're in the upper rat zone. And so you can wait for a short trigger to go short if you're so inclined. And looking at the pivots, the pivot was taken out, but what's really interesting, remember we had to take out a lower pivot that hadn't been filled, and we were trying to decide which one would get taken out first. Well, it was this one right here. It finally got taken out. So now we'll be looking to take out this one. These pivots, I don't know if we're going to be revisiting these, but anything could happen between now and the end of the year. Price action trading. Once again, you know, repeating. We've got a 3-ball, green at the line, profit. We got a 2-ball, looking for red at the line, right there. Simple stuff. There's a few traders out there that really like it. More horizontal lines from the previous daily session. Red at the line short. See right here we had a green at the line. That would have resulted in a loss. Green at the line resulting in a win. Okay, wick zones. Price doesn't like staying in the wick zones, as we can see. Holo zone. There were multiple opportunities to jump in here below 110.66. And now you can see we've got a short trigger at 111.059. So look for the end as short right there. But you see, got a bull M15 candle, so you might want to wait for this candle to close to take that short. Or you can always drop down to M5. You can see we're just going back and forth, all of about what, 3 pips, 4 pips, maybe, just oscillating. No real trades there. We had a long trigger here. Somebody will call it a Harry hindsight. Here's your nearest long trigger. And here's your nearest short trigger, looks like. Oh yeah, these are the inventory reduction bars. So these are all the inventory reduction bar trades. And daily, weekly, monthly, open, high, low for the current and previous session. We're looking at daily, weekly, monthly. Einstein line. Once again, when I opened the chart, it told me to go long right there, and as you can see, up a couple of pips. No biggie. And a couple of more. Once again, Randy real time as opposed to Harry hindsight. So that's it, fellow traders. Remember, sometimes when you win, you lose, and when you lose, you win. But that's kind of esoteric. But always remember, never forget, it's not what you trade, it's how you trade it. Get out there and drain the banks.